Alright guys, so let's talk about China, the US, and the battle on the currency markets. Now, this economic war is full spectrum. We have Trump weaponizing the US consumer markets to checkmate China. In response, China used their supply chains to flip Trump's game on its head. So both sides are using whatever advantage they hold. But China is now using the dollar itself to squeeze US capital markets. And for this video, let's focus on one aspect of capital markets, and that is the ability to borrow money as cheaply as possible to fund your economy. If China can borrow money at half the rate versus the US, they have more financial ammunition to pull ahead. It is as simple as that. That's why China's central bank is buying 20 billion RMB of Chinese government bonds. It helps to push down bond yields and injects money directly into the Chinese economy. They can do it because inflation in China is extremely low. But what if you can throw a bigger spanner into the machinations of the US? And this is where China is beginning to use their enormous stash of dollars and their trade surplus. Yes, China is de-dollarizing. And yes, they are still selling down their stash of US Treasuries. But that still leaves them with a mountain of dollars, doesn't it? Half of China's trade is still done in the reserve currency. But what if you can weaponize your own holdings against the Treasury market itself? The Treasury market today is the biggest bond market in the world. In 2024, there's still an incredible $28 trillion worth of US government bonds outstanding. That is what's propping up the US economy. But the world is starting to de-dollarize. Central banks are buying less and less. As Besson continues issuing treasuries, rates will continue to stay elevated for him. And this is where China is starting to squeeze US capital markets. It's also a reminder to the Trump administration that Beijing still has financial tools available to make things difficult for Washington. If you decide to go head to head with us, we can make it more expensive for you to get funding. We are happy to take the interest rate hit just to see you suffer. Now, China just raised $4 billion in the global markets. They issued $4 billion worth of dollar bonds in Hong Kong, and the demand was incredible. The Chinese sold 3-year and 5-year bonds, and they were bought on par with US debt yields. Beijing's cost of borrowing dollars is on par with what the US Treasury itself is paying. Now, this is important because China isn't even the issuer of the reserve currency. The US, through the Federal Reserve, has the power to print dollars, but China's own borrowing cost is on par with Scott Besson, and it tells us that the world sees Beijing as a safe counterparty on par with the owner of the reserve currency. The world still needs a place to park their dollar earnings, and China seems to be just as credible as the US here. This means China will be able to access the US dollar system at will without any drawbacks. Good luck trying to cut Beijing off the dollar architecture. China is building and confirming their own. Investors are diversifying their investment portfolios. Even if it's the same underlying asset, it's still a dollar denominated bond. But where it is held really matters now. There has been a build up over the years to this moment. Now, sure, Chinese exports and its trade surplus adds confidence. The world knows that China can get the dollars to repay the debt. But the US also scored multiple own goals. We had Biden confiscate Russian assets, which was a really boneheaded move. Then we have Trump dragging the government shutdown out. And all this erodes confidence in Washington, even though they are the issuers of dollars themselves. Now, China's issuance met incredible demand, and the details matter here. Beijing sold only $4 billion worth of bonds, but demand was 30 times higher. They had $120 billion worth of bids, and this tells us that China can easily raise hundreds of billions of dollars if needed. They can really put the squeeze on the US Treasury. This is a real competitor on a global stage. And guess who the buyers are here? They are central banks, sovereign wealth funds, and insurers. They were allocated 43% of the bonds, so big institutions are the biggest bidders. They see the value of putting some assets out of US jurisdiction. They might not be de-dollarizing, but they are starting to shift their USD holdings to Chinese assets. The what if question is getting louder and louder. What if Washington confiscates my assets for being a bad boy? It gets even more interesting when we look at the distribution of the bonds. The world as a whole participated in this debt issuance. It's not just local Chinese investors that bought the bonds. More than half went to investors in Asia. Even EU investors took 25% of all bonds. Meanwhile, Middle East and African investors were allocated 16%. There is a big global demand here, and it shows in a big appetite to diversify away from the US itself. The global south and BRICS countries, they will continue to drive demand for China dollar bonds. Now, sure, they need the reserve currency to operate on the global stage, but that doesn't mean they need to hold it in US custodians and banks. And this will make Besson's job of borrowing money that much more difficult. The US economy is hyper financialized. Trump wants to rebuild US supply chains, especially that of rare earths. He also wants to keep the AI bubble afloat. Well, if funding costs stay high, this is going to push US debt closer and closer towards eventual default. The level of dilution is still incredibly high in Washington.
I think we're going to have what I call parallel prosperity. Main Street can do well, Wall Street can do well. It's been a long time since Main Street's done well, and that's what happened in Trump 1.0. Hourly workers did better than supervisory workers. The bottom 50% of households had a net worth increase that was higher than the top 10%. So we are going to see Main Street surge here along with Wall Street, which we've already seen.
But it seems Scott Besson is living in an alternate reality. He exists in a parallel universe where the US is winning the trade war. It's not looking good, Scott. A few days back, we said that the US lost 950,000 jobs. Well, we were mistaken. The situation is even worse now. Mass layoffs are getting even worse, and a big part is thanks to high borrowing costs. October's layoff numbers are out, and it is a horrific 153,000 jobs lost in a single month. This is worse than 2020 and only surpassed during the dot-com collapse. Year to date, US job cuts have exceeded a million. This is not a good look. When the US government is forced to borrow at higher rates, it trickles down to the real economy. If Besson borrows money at 4%, it means companies have to pay 6% or 7% or more to get funding. So China's squeeze does have material effects. Now, that's only the financial hit on US bonds. It is now leaking into the US AI bubble that's just waiting to burst. As we mentioned before, how China and how the US approaches AI are very different things. China tries to do things in a sustainable way, meanwhile, the US loves to use debt and deficits. And now we have the US giant OpenAI really worried about funding their own infrastructure build out. They want to lead China and widen the gap, but they realize the funding gap is incredibly ridiculous. $1.4 trillion in investments on data centers and chips sounds impressive, but their revenue is at best $20 billion annually. The math just doesn't add up. You can't math the math. And now we have crazy news of OpenAI requesting US government support, basically a backstop to guarantee financing for the massive investments. Now, sure, Altman made a U turn on that request, but the desire and the intention is still very clear. The US is staring down a big financing black hole. It's only going to get worse if the AI bubble pops, and the odds of that happening are growing bigger and bigger. Now, Altman correctly pointed out that the playbook and the huge debasement shock that is coming, we can't escape it. Trump has created an AI monster bubble that will leave the federal government on hook. Here's the bailout nightmare that's coming. When something gets sufficiently huge, the federal government is kind of the insurer of last resort, as we have seen in various financial crises. The government ends up as the insurer of last resorts. And if this happens, it's no longer capitalism. It's the US government subsidizing big tech and endorsing crazy risk taking. And that's why China could very well win this tech and AI race. They are working hard, they are innovating fast. At the same time, the US is busy at a funding casino throwing the dice. Guys, sooner or later, you'll end up with snake eyes and then everything implodes. Now, does it get worse? It absolutely can. In fact, Washington has probably shut the door to China forever. They just cut away the biggest semiconductor market in the world. Trump is blocking the sale of Nvidia's watered down chips to China. Even the less powerful versions are being denied to Chinese companies. This is so bizarre, considering we just had a trade truce a week ago. So many own goals in just 7 days, it's unbelievable. Will this collapse China's AI or chip ambitions? No, it won't. It will just force China to triple down on their domestic supply chains. And when we think of China's advantage in a chip war, there are many facets to consider. They have a big ocean of talent. That part is very obvious. There's also big domestic demand. However, they are also giving their companies huge subsidies and vouchers for cheap energy. If you're a Chinese company that needs computing power, well, Beijing will help you out. This allows them to run the strategy of bundling together a bunch of Huawei chips to outcompete Nvidia's chips. Quantity has a quality of its own. The US might be ahead, but China has a lot of good cards as well. But there's a big difference here. China isn't blowing up a big AI bubble in the process. They can outlast the US, especially if Trump continues making major missteps. Even Jensen Huang has given up. He's warning Washington that China will beat the US in the AI race, and the main advantage China has is their incredible access to cheap energy. And if this continues, China's going to win. And when that happens, the US AI bubble itself will pop anyways. China will unleash a ton of cheap AI chatbots that will charge maybe 10% of what the US is charging. Then it's truly game over. Once again, this all boils down to US infrastructure and how it is way behind the eight ball. The US itself might be self sufficient in fossil fuels, they have a ton of oil and gas, but they just don't have the energy grid and enough power generation plants to fulfill demand. And yes, the US also refuses to import Chinese solutions. Everything else from steel to copper are under heavy tariffs as well. So, can you understand how insane the situation is? Power globally is going to explode for data centers alone, but US consumption, thanks to the AI bubble, is going ballistic. Just look at the trend. In AI data centers alone, the US will go from 17 terawatt hours to over 150 terawatt hours. That's almost a 10 times increase. How are you going to make up for that shortfall? You just can't import electricity like that. Even if you build them out today, the regulations and permitting could take years before a single watt of power is generated. The cost will be insane as well. It definitely won't be as cheap as China, I can say that. So sit back and strap in. This AI war is going to get nastier. The US might just self implode before China even catches up. This is just crazy. But as always, let me know what you think. Will China continue squeezing the US Treasury market? And will the US AI bubble self implode? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this economic apocalypse.